as I've explained to you, there's no such thing as a bull run or a bear market or a bear market. Bear markets are just sell pressure for extended periods of time. Bull markets are just buy pressure for extended periods of time. And they're just called that because investors will hold for long terms. Look at the overall performance of the long-term market and think of that as a market, right? Whether the market is generally going up or generally going down. But as traders, that's completely irrelevant, right? So the question is, are you prepared for Bitcoin and the fact that Bitcoin is going to explode? Well, is it going to explode? Is that the information you're seeing with the leading information on the short term? As a trader, not as an investor, as a trader, are you seeing that the market's about to explode? Or are you seeing that the market is just doing what the VEPS is indicating? Right now it's Sunday, and even though the fact that there is a very relatively tight central daily range on the VRE, right? It's like 0.03% or something like that. So it's tight, and it's certainly a trending day in terms of the probabilities. And on the 15-minute or lower time frame, certainly we're likely to see trending moves. Obviously, on the very low time frames, there are already trending moves happening all the time. What the long-term information should not form your bias on any given day. Okay, there is no shortage of people, and I just said this in the previous video, who get wrecked in the short term because they believe noise that some noisemaker made about long-term predictions that have nothing to do with what's going on right now as you are about to place that trade, right? If you're about to place a trade and you think it's going to go long and we're going to hit over 100K in November, and so you've decided that we've already hit the bottom and it can't go any lower than where it's gone to right now, I hate to break it to you, but there's always probabilities to the upside and the downside in the short term as well as the long term. And there's every indication to suggest that the price action will continue to remain volatile because the returns are volatile. And the price action isn't how you measure volatility to begin with. Price action is a byproduct. It is the result of the returns. And it is a result of the standard deviation of returns and the correlation. So keep that in mind. Don't get wrecked trading short-term assets or trading short-term moves as if they have anything to do with high time frames, because they don't. If you want to stack and hold, buy and hold, that is a much safer strategy than trying to trade short-term. Trading short-term is not for everybody, right? It's absolutely not. It is high risk. Is there high reward? Yes, if you do it right. If you do it wrong, no. There's only risk and pain and suffering, and it's not worth it. It's not worth getting wrecked, right? Don't bet the farm. Trying to trade short-term markets if you don't understand how. Trying to trade low time frame trades if you don't understand how. And if your basis of information is, well, analysts said that it's going to hit six figures by November or December, that is the surest way to get wrecked. Right? Trying to trade low time frames based on high time frame information. Don't do it. All right, happy trading. See you later.